Friends, welcome to Yadnya Investment Academy. Through our fund analysis series, we had reviewed some of the most popular mid-cap funds, and in this video, we are going to compare all of them. Mid-cap funds would suit people who have a growth or an aggressive risk profile. That is, people who are comfortable keeping more than 80% of their investments to equity. Or you should go for mid-cap funds if your investment goal needs an annual return of around 12 to 15%. Not to mention that this goal has to be a long-term goal because equity investments are meant for the long term and these can be volatile in the short term. Now in this video you would see that mid-cap funds have given returns way higher than 12 to 15%, but 12 to 15% is a realistic expectation from mid-cap funds. So let's get started. We are going to compare DSP Blackrock Small and Mid-Cap Fund, HDFC Mid-Cap Opportunities Fund, UTI Mid-Cap Fund, Mirae Asset Emerging Bluechip Fund, Franklin India Prima Fund and SBI Magnum Mid-Cap Fund. Now DSP Blackrock, HDFC, UTI and Mirae Asset Funds follow Nifty Free Float Mid-Cap 100 as the benchmark index, while Franklin India Prima Fund follows Nifty 500 and SBI Fund follows Nifty Mid Small Cap 400 as its index. Now we'll compare all these funds with their individual benchmarks as far as the parameters like beta, R squared, alpha and P are concerned, which are index dependent. Once this is done, we are going to compare all these funds with Nifty Free Float Midcap 100. Because all these funds are made of around 60 to 80 stocks, Nifty Free Float Midcap 100 is made of 100 stocks. So this index seems to be more concise as compared to Nifty 500, which is made of 500 stocks, and Nifty Mid Small Cap 400, which is made of 400 stocks. Standard deviation is the amount by which the returns of a fund may go up or down in correlation with its average returns. So, a lower standard deviation is what is desirable. If you look at the standard deviation values of all the funds and compare it with Nifty Free Float Midcap 100, only UTI and DSP funds have higher standard deviation, indicating that they are more volatile as compared with the benchmark index. Now, a beta value tells you how closely is a fund correlated with its benchmark index. UTI Midcap Fund has a beta value of 1, indicating that the portfolio of UTI Midcap Fund is in perfect correlation with that of Nifty Free Float Midcap 100. An R squared value tells you how reliable is this beta. 0.8 and above is what is desirable, but here all the funds have an R squared value lower than that of 0.8. Now all the risk return parameters like beta, R squared, Sharpe ratio, standard deviation should not be looked at into isolation. So let's move on and look at alpha now. An alpha value tells you the amount of returns a fund has generated over and above the ones predicted by its beta value. So all the funds have done an excellent job by producing an alpha of over 15%. Sharpe ratio represents the risk return correlation of a fund. It tells you the amount of returns generated by a fund per unit of risk taken. So a value above 1 is what is desirable and all the funds have a Sharpe ratio above 1, where Mirae Asset Fund has an excellent Sharpe ratio of 1.77 and HDFC, Franklin and SBI funds too have a good Sharpe ratio. Now a turnover tells you the amount of portfolio of a fund replaced in the last 1 year. A turnover below 50% indicates buy and hold kind of a strategy. Here, all the funds have a turnover lesser than 50% except Mirae Asset Fund. Now this percentage indicates higher churning of the portfolio, but you should be bothered about this figure only if the fund is not able to produce returns for you even after churning. Expense ratio is the amount of fee charged by the mutual fund for managing your money. It is a percentage of the total assets managed by the fund and is straightaway taken from the profits the fund generates for you. So a lower expense ratio is what is desirable. Average expense ratio in case of mid-cap funds is 2.47. So here, except DSP Blackrock Fund, all the funds charge a lower expense ratio, where SBI Magnum Fund charges the least. And even in the case of DSP fund, it is slightly higher. You should be bothered about this figure when you're comparing two funds which are giving similar returns, and so the expense ratio would matter there. A higher amount of assets under management indicate the amount of trust the investors have in the fund. Among all these funds, Franklin India Prima Fund is the oldest, launched in December 93. It has around 5,700 worth of assets under management. HDFC MidCap Opportunities Fund is a relatively new fund launched in June 2007, and even then it is today managing more than 16,000 crores worth of assets. Now the market capitalization could be suggestive, could tell you if a fund holds a higher proportion of large cap stocks, and if you see the specific breakdown, you could confirm the same. So as of 17 May 2017, HDFC MidCap Fund, Mirae Asset Emerging Fund hold a proportion of large cap stocks greater than 30%. Franklin India Prima Fund may seem like holding a higher proportion, but if you go into the specifics and compare the average market capitalization of the fund with that of the benchmark, which is Nifty 500, the fund holds a proportion of large cap stocks which is below 30%. Average market capitalization and P ratio are temporary figures. The portfolio of a fund could change the next day, and so I have highlighted these two parameters into red. If a fund has a P ratio below than that of its benchmark index, it indicates growth potential of the fund. P ratio of Nifty 500 is 29.09 and that of Nifty Mid Small Cap 400 is 53.72. So if you compare P ratios of all the funds with their respective indices, all these funds have growth potential. Let's talk about the trailing returns now. All the funds have beaten the benchmark Nifty Free Float Midcap 100 in 10, 7, 5 and 3-year trailing returns, except one instance where SBI Magnum MidCap Fund has not beaten its benchmark in 10-year trailing returns, where the difference is just 0.18%. As far as 1 year of trailing returns are concerned, the DSP and Mirae funds have been able to beat their benchmark. HDFC MidCap Opportunities Fund has not been able to do so, but the difference here is lesser than 1%. UTI, Franklin and SBI funds have not been able to beat their benchmark in 1 year of trailing returns, but since these are trailing returns, the picture might change in some time. A look at the calendar returns would give us a better picture here. Let us look at the calendar returns now. The DSP Blackrock Small and Midcap Fund had a bad start in 2007, but since then the fund has shown good performance, where it has been able to control its losses when the markets moved down in the years 2008, 11 and 13, and when the markets rallied in the years 2009, 10 and 14, it was able to beat its benchmark by more than a difference of 10%. The HDFC MidCap Opportunities Fund slightly lagged behind its benchmark when the markets rallied in 2009. It was able to control its losses in the years 2008, 11 and 13 better than that of the benchmark. In the year 2015, the difference between the returns of the benchmark and the fund was less than 1%, and good performance in the year 2014 has lifted its 3, 5 and 10-year trailing returns. The UTI fund had some bad initial years, but since 2009, the fund has shown good performance, where it was able to control its losses better than that of the benchmark in the years 2011 and 13 when the markets moved down. When the markets rallied in the years 2009 and 14, the fund was able to beat the benchmark by more than 10%, where 2014 was a real good year, where it was able to beat the benchmark by more than 34%. And so the returns of 2014 was able to pull up its 3, 5, 7 and 10-year trailing returns. Mirae Asset Emerging Bluechip Fund was able to beat its benchmark in all the calendar year returns. It has not seen the market fall of 2008, but it was able to control its losses better than that of the benchmark when the markets moved down in the years 2011 and 13. Franklin India Prima Fund had a bad patch of performance from 2006 to 8, but since 2009, the fund has shown good performance. In the year 2010, the performance of the fund lagged behind the benchmark by just 0.05%. 2014 was a real good year for the fund, where it was able to beat the benchmark by more than 40%. Franklin India Prima Fund is one of the oldest funds, launched in 1993, and since inception, this fund has given returns of 21.02% on an annual basis to its investors. SBI Magnum MidCap Fund had some bad years 2007 and 2008, but things changed for the fund, where the higher management at SBI was changed in 2009, and in 2010 the fund manager Sohini Andani joined the fund. Since 2012, the fund has been able to beat its benchmark by more than 8%, where 2016 was slightly tough for the fund. Let us talk about the fund managers now. Vineet Sambre of DSP Blackrock Small and Mid-Cap Fund is a BCom and FCA. He has worked extensively in the investment field since 1998. He also handles two other DSP funds where DSP Microcap Fund is ranked the topmost in its category. He specializes in small and mid-cap stock picks. Chirag Settlewad of HDFC MidCap Opportunities Fund is a BSc and an MBA. He handles total 10 funds at HDFC Fund House. HDFC Balanced Fund under him has given best 10-year trailing returns. He has a long stint with the fund house and all the funds handled by Chirag have given exceptional performance. Lalit Gopalan of UTI Midcap Fund is a BCom, MMS and a CFA. He handles total 10 funds at UTI and has been working in capital market. Though he has taken charge of the fund recently, he has been with the mutual fund house for a long time. The ELSS fund he handles has given below category returns in the last 3 years. Also, performance of Lalit is not known much. Nilesh Surara of Mirae Asset Emerging Bluechip Fund is a BE and an MBA Finance. He handles 3 other Mirae Asset funds where the tax saver and balanced funds he handles are newly launched, and the large cap fund that he handles has given exceptional 5 and 7-year trailing returns. Franklin India Prima Fund is handled by R. Janaki Raman, Hari Sham Sundar and Shrikesh Nair. Janaki Raman is a BE and PGDBM Business Management and handles total 6 funds at Franklin India Asset Management Company, with all the funds giving exceptional 5 and 10-year trailing returns. Sohini Andani of SBI Magnum Midcap Fund is a BCom and a CA and handles 2 other SBI funds. She has worked in investment and securities area before joining SBI Asset Management Company. SBI Magnum Midcap Fund has really done well since Sohini took the charge. Let us look at the 5-year SIP returns in each of these funds. For a total investment of 6 lakh rupees, where the monthly investment was 10,000 rupees, DSP Blackrock Small and Midcap Fund was able to create a corpus of 12.05 lakhs. HDFC Midcap Opportunities Fund was able to create a corpus of 11.9 lakhs. UTI Midcap Fund was able to create a corpus of 11.69 lakhs. Mirae Asset Emerging Bluechip Fund was able to create a corpus of 13.69 lakhs. Franklin India Prima Fund was able to create a corpus of 11.78 lakhs, and SBI Magnum Midcap Fund was able to create a corpus of 11.89 lakhs. And if we try to calculate a compounded annual growth rate on this investment, DSP Blackrock Small and Midcap Fund was able to give a CAGR of 27.84%. HDFC Midcap Opportunities Fund was able to give a CAGR of 27.29%. UTI Midcap Fund was able to give a CAGR of 26.56%. Mirae Asset Emerging Bluechip Fund was able to give a CAGR of 33.16%. Franklin India Prima Fund was able to give a CAGR of 26.87%, and SBI Magnum Midcap Fund was able to give a CAGR of 27.29%. So, to summarize, DSP Blackrock Small and Midcap Fund has given good trailing and calendar year returns, but has a higher beta value with just a Sharpe ratio of 1.31, shows that it has not been able to pull out the amount of returns equivalent to the amount of risk it is taking, proving it to be a high risk fund. HDFC Midcap Opportunities Fund has a beta value of almost 1 and a good Sharpe ratio. It has good performance and better capacity to manage market falls. It has a well-diversified portfolio in terms of stocks and sectors too. And a higher allocation to large caps make it a below average risk fund. UTI Midcap Fund has a beta value of 1, and even then it is able to manage a Sharpe ratio of 1.36, making it a below average risk fund. Though the performance of the fund is not consistent with average performance in the bear market and good ones in the bull market, the performance of the fund has improved a lot in the recent years. Mirae Asset Emerging Bluechip Fund has a beta value below 1 and an excellent Sharpe ratio. It has given consistent returns with better capacity to control losses in the market falls, make it a low risk fund. It has a well diversified portfolio and a larger allocation to large cap stocks. Franklin India Prima Fund has a beta value of almost 1 and a very good Sharpe ratio. The good performance of the fund in the recent years make it a below average risk fund. The fund has had a bad performance patch from 2006 to 2008, but since 2009, its performance has been good with no looking back, with 5-year trailing returns of the fund being among the top 6 in the category. SBI Magnum MidCap Fund has a beta value lower than 1, a higher Sharpe ratio, and has given good performance except 2008, which make it a below average risk fund. The fund has been doing good since a change in the higher management in 2009 and Sohini handling the fund from 2010. Friends, hope the video was able to do justice with the comparison of the mid-cap funds. Thanks for watching this video. Watch this space for more such topics. Until then, happy investing.